Traders, another trade setup has in fact emerged, and we're looking at the EURJPY. Now, EURJPY has been bearish for a substantial amount of time. We're talking nearly 18 months now. And if I just show you this weekly time frame, as you can see, the moving averages are converged, the spread open nicely. We have a series of discrete lower swing highs, and we're just pushing lower and lower and lower. Most recently, we have had, so weekly time frame, we have 1, 2, 3. And as you can notice, this spike here is in fact tiny bit lower than the doji in the middle. So we have 1, 2, 3. This is our 3-pin bearish reversal. We've came up, and as you can see, we spiked 118 weekly resistance, more or less, to an accurate degree anyway. Now, with that being said, I'm looking for a downside weekly target of maybe EURJPY returning to 110. Maybe even back down to 112, anywhere around here, to be honest, because we do have some daily area support which I need to go and put on in a moment. So let's go to the daily time frame. Let's see what I'm expecting on this one. So I'm not sure why, but one of my daily levels have disappeared, so let me just snap that back on right there. So we have 1, 2, 3. That is a daily area of support. Now with this one, the MAs on the weekly and the daily are in fact down, which helps me. They're a great guidance system. As to, yes, we are still bearish. But by all means, EURJPY could in fact find support around 112. So we've had 1 breach, 2 breach, and we couldn't stay below the 112 region for very long. Now, with that being said, we can in fact reverse to the upside. Okay. Maybe it. By the way, today is Thursday and it's 10:30 GMT, so we're still in a London session. Now, if I go down to the 4-hour time frame, this is where it gets a little bit interesting. Now, recently we have dipped back below the daily region, which is now resistance. Okay, we could maybe even consider this level as most recent swing lower highs. And what I've seen, what the actual trade setup is, I'm 30 minutes late on this one, but we've had 1, 2, 3. And the moving averages are also down on the 4 hours. So we have weeklies down, dailies down, 4 hours down. I've seen the 3-pin sets at 1, 2, 3 right there. So as I say, I'm 20 minutes late to the entry, but it doesn't really matter too much. So my entry should have been at the base close of this 4-hour candlestick. Now, in terms of risk reward, let me just put the risk reward profile on there because I'm going to go and enter this trade anyway. So short, okay, at the base, but obviously I've missed that by 5 or 10 pips, which I'm not too concerned about, to be honest, because the risk reward does make sense, and I'll show you how. So at the spike, so we have 113.33, and with this one I'm going to use a 30 pip stop loss because the yen pairs can be quite erratic. So my stop should be 113, let's just say 113.60. So 113.60 is my stop. I'm going to enter short, so my stop overall, guys, is 61.62 pips. My target with this one is I'm just going to go back to 112. So 112.06, 112.05 is cool. So this is a risk reward profile of a 1 to 1.5. We're looking at the 4-hour time frame. We're going in line with the overall trend direction, and the primary reason for me entering this trade is the 3-pin formation 1, 2, 3 at daily resistance. Two nice confluences there. Going in line with the overall trend. 61 pip target for just under 100. 61 pips risk, for just under a 100 pip target. Trend trading, going with the overall direction. As I say, this is a level on which we could spot a reversal, but the risk reward to me here is pretty decent. 60 pip stop isn't too much. And just to let you guys know, this week has been quite quiet for me as well. I've only took 1 trade prior, which is the gold trade, which is still running right now. So yeah, if I already did or already had a good few trades running, or I've already took some profit this week, I probably wouldn't be interested in this as such. But because the activity of trading for me has been relatively low, I'm going to go ahead and take this. So 1 to 1.5 risk reward, risking 60 pips for near enough 100, going in line with the overall trend direction. Let's see how it goes.
Hey traders, welcome back. EURJPY. Unfortunately, I have been stopped out on this one. I lost 60 pips. Why did I get stopped out? Well, I did go over this was more or less a bit of a risky trade. Not in terms of there weren't too many confluences and so forth. However, there was, in fact, a potential for EURJPY to come all the way back up to this region once more. There was a chance EURJPY could go into consolidation, i.e. sideways, play around for a little longer before actually following the overall trend to the downside. Let's have a look at today's candlestick. Now, today's candlestick is, in fact, it's not really any formation to be fair, but yesterday we did in fact close as a doji. Okay, we have a small thin body and we have wicks more or less equal length, equal height each side of the open and close. So yesterday was quite indecisive. Today's candlestick, we were in profit, and unfortunately we were around, I would say, just nearly halfway to our target, and EURJPY decided to rebound, and we've just come up to test the weekly resistance. So this is resistance over here. I haven't actually updated this. This is weekly resistance. So what next? Well, to be honest, it's now 10 past 9 GMT over here in the UK, and I'm watching this for a potential reversal around this zone. As you can see here, the current 4-hour candlestick, which closes in 49 minutes, that's the date, the close of today. There is a potential for this to maybe even reverse back to the downside. However, I'm not going to be looking at the 4-hour time frame for a potential execution. So let's look at the 2-hour. 2-hour, as you can see, we spiked above. Now we've made highs at 69, so unfortunately it's breached our stop loss placement by 9 pips. How could of this trade, how could we maybe have prevented this from happening? Now, looking back at this trade, follow the rules, 15 to 30 pips. So we chose 30 pips just above the daily area, because remember we entered at the base of this candle after the 1, 2, 3 formation, and I chose 30 pips. Followed the rules, had a pretty decent target in mind. But yeah, as I say, looking back at this now, we have in fact spiked up, and we spiked through the weekly resistance. Am I upset? No. Is it a learning curve? Yes. What I can really take away from this is, number one, my key levels are still accurate as hell. Okay, I'm not faulting these, as you can see here, 1, 2, 3, and this could be a third touch. If these highs remain, and we do get a reversal to the downside, no, this could be a lower swing high from this one here, because if you can see 1, 2, 3, this 3-pin pattern once more, as we've stayed directly below 114 resistance, 113.60 resistance, sorry. You can see the highs of this middle candle, 113.74, we haven't breached that. So it's going to be interesting. So I'll leave that for another video, but what we could have done maybe is we could have just placed it a little bit higher, maybe above the weekly resistance there. However, followed the rules. I'm not going to dwell on it. I'm 60 pips down on this trade, and there's a potential for it then to reverse back to the downside. But that's it, guys. That was a failed trade. Everything lined up nicely. I did mention it was a little bit of a risky one, because yes, we can come into consolidation now. And remember, yen pairs can be slightly aggravating at times. Okay, so yeah, that's that.